This is it, and we use the mathematics trading system for this approach, and I'm going to show you how to trade using mathematics. So that is it. If you are new here, subscribe to the channel. We are in this trade right now. It's a live trade. Now let's go to the MT5 and let me show you. So this is the entry. You can see took the trade somewhere around here, targeting this high here. Now I've closed some trades. So this is the profit running. I've closed some trades. Let me show you the history. I've closed two. That was a buy on GBP USD. That is, you can see buy here, GBP USD, targeting this high here. All right. So back to the video. How did we use mathematics to do this? Okay, so you understand the candlestick anatomy. That is the candlesticks, how the candlesticks works. And this line here is the previous day low. This line here was the previous day low. All right, so you take the number from there. This area is 1.33432. So we take that number, and that is the number here. Okay, so we have this number here, this line at the top, that is the zone, which is 1.33984, and we have this one too here, this area. Okay, so you make the you do the mathematics, and you're gonna have this number. So the thing is, all right, if you want a complete video on how to do this, the reason behind this, let me know in the comment section, and I'll do a complete video and how to go by this approach. Now, do you know how the candlestick anatomy works? So if you don't know, let me go through that one real quick, because we're going to be using that one at this place. If I say the candlestick anatomy, this is what I mean. I know you all understand this. So let me go through this one real quick. When you take this candle, that is a bullish candle. Sometimes it could be black, depending on the trader who chooses to make it the way it is. Now look at this candle here. This is a bullish candle. Sometimes it's black. All right, so this is the body, and we have, this is the body right here. This is the body. When you take this top here, this line here is the wick that is showing right here. So this one is the wick. We have the wick right here. So for a bullish market, this is the high. This is the high. Market opens here, push up, then close here. All right, so this is the open, this is the low for a bullish market. That is why price is rising in the bullish market. Okay, for the bearish, this is the high, this is the high. Okay, this is the open, price comes down here, close here. Okay, so we have the open, close, high, this is the low. Okay, high and low. All right, so this is the candlestick anatomy. I know you guys understand this, because we are going to be using this principle for our entry. Now back to the chart. So now we had this push up here to the downside, now trying to push up. So how are we going to know price will push up? That is the reason why we came by with these numbers here. So you see the candle that form here. Look at the candle that form around this place. So we had this candle, the body is here. Let me take this one out. The body is here with the wick at the top, wick down below here. So this one, you can see that the wick and the body is looking the same. You can see this one, and after that we have this strong bullish candle with no wick. You can see this one. All right, so now we find the low and then the high. The numbers is here. So what you're going to do is, now we have 531. All right, so we take the constant number, which is 1.33. You can see 1.33, and then you add it to this one. Okay, so it will make we're gonna get, so it's going to be 1.33. I'm adding to the number that we get, 33531. Okay, so that's the number that we have here, 1.33531. So you take your horizontal tool, you put it on the screen, then we change the digit to 1.33531. That is the number we get here. So that is going to be the low that price shouldn't get, so that is it. So that will be the low that price shouldn't break this low. Okay, so the moment price break this low, trade is wrong. All right, so there's no way price will break this low right here. This is the support, and you can see that it's actually reacting to this one also here. So we had a push up, push down, and we had this morning star here. So our entry was from this morning star confirmation here. Take the entry, that is price stop loss should be below this low here, that is the low that price shouldn't get to, and TP2 was here at first, TP2 was here at first, and now TP2 I'm targeting here. Okay, so that is how to go by this approach. And the entries is here, holding only one. I have closed two already. I'm holding this one. The time is 3:58 p.m. down below here, so I'll be holding this trade till tomorrow, and we see how it goes, guys. So if you are new, follow the page, like the video. Have any question, let me know down below. And if you want a complete video of how to apply this principle, the reason why we came by these numbers, let me know in the comment section. I'll do the video and tag you as well, guys. So this is simplified forex classroom, and I'll see you guys in the next video.